All right, what's up? My name is Schieffer. I'm the founder of ZHS Ecom, and we've run email and SMS retention marketing for over 50 different D2C brands, from ones starting out all the way up to multi-billion-dollar publicly traded companies. And today I'm walking you through the exact segmentation playbook that we use across every single account. By the end of this video, you'll know exactly how to segment your list, what to send to who to leave alone, and how to measure if it's all working. So whether you're running your first campaign or you're operating an 8-figure brand, this framework is the exact same, just the depth changes. Full written guide is linked in the video description if you want to go ahead and download and reference it later. All right, so story time here. We had a multi-8-figure brand come to us last year. They had about 200,000 email subscribers. They knew enough not to send to the entire list for every single campaign, but they were still hitting around 120,000 people for every single send. It was just way too wide. On the surface, open rates were okay. They're hovering around 20%. Click rates were about 1%. However, conversion rates were dropping. Revenue per campaign was dropping quarter over quarter, and they couldn't figure out why. They thought they had a creative problem, but in reality, they had a segmentation issue. We see this all the time with the brands that we work with. Smart operators, they already know the basics of segmentation, but their audience is just way bigger than it needs to be. And there's a lot more depth that they can be doing and including within their segmentation. So here is the math. This brand was sending to around 120,000 subscribers for every single campaign. Only about 1 in 5 of those people were actually opening, and roughly 1 in 1,000 of those openers were actually buying. So they paid Klaviyo to deliver 120,000 emails for every single send, but only about 24,000 actually opened, and around 130 actually checked out. Now, here's the thing. The other 96,000 people weren't completely dead weight. That's the trap. However, they were actively hurting the people who actually would buy, because every time that you mail someone who doesn't open, Gmail, Outlook, Apple, they're all watching. They see this engagement rate dropping, and that means that they route your future emails away from the inbox. Therefore, the people who would be buying actually stop seeing those campaigns. That's the issue. That's the mistake right there. Mailing way too wide of an audience isn't free. It's actually very, very expensive, not because it costs so much to send the email or anything like that, but it's because it's hurting your deliverability, which means actual buyers are way less likely to actually receive that email directly in your inbox and not in their spam folder. So the fix isn't sending to fewer people just for the sake of it. The fix is figuring out which subscribers are actually worth talking to today. That's the whole premise of this video. So your list isn't just one big CSV file of people. We like to first break it into 3 main tiers to keep things simple. So tier number 1 is just your core engaged group. These are people who actually opened and clicked in the last 30 days. That's a great starting point, but 30, 60, 90 days, somewhere in there. That's really your core engaged group. They want to actively hear from you. Then you've also got your warm audience. So these are people who might have opened a few months ago. Maybe they buy in the next sale. Maybe they don't. They're warm. And then you've got this dormant segment. These are people who haven't engaged in 90, 120, 180 plus days. These people are really costing you money, not in your ESP billing alone, but in deliverability. Treating these 3 groups the exact same, it's a massive mistake. Quick aside on deliverability before we get tactical. When you mail too wide of an audience, here's what actually happens. Gmail watches the engagement rate, Apple, Yahoo, Outlook, all of them. They're watching to see how many people actually open, click, mark as spam, etc. And they're grading you in real time. 6 months of low engagement, and they quietly route your future email sends to spam. You won't see it immediately in Klaviyo or HubSpot or Salesforce or whatever. You're going to see it in your revenue per campaign 6 months later. It could be the same brand, the same creative, but suddenly you're making half of what you used to. You might think it's the creative or the market. It's not either of those. It's because you're not segmenting properly. That's why we obsess over who you mail just as much as what you actually send out. So This is the spine of the entire playbook. This is really the kind of the base plus the add-ons that we'll talk about. So pay attention. This is absolutely essential. So starting with the base, we start with the base and then we layer in the add-ons. So if you think of it like a meal, you start with the steak, that's your main, and then you have your side dishes. You have your mashed potatoes, your green beans, your drinks, your appetizers, all that fun stuff. For segmentation, same thing. You're going to have your base audience. Typically, that's your core email engaged segment. So people who opened or clicked in the last 30, 60, or 90 days. And when I refer to email engaged segments, like I specifically mention email engaged, not just general engaged, because I'm talking about only opens and clicks on the emails. There are tons of other ways to engage as well, like adding to cart, visiting the website, checking out, so on and so forth. We'll get to those next. We call those more like site engagement. So we just want to focus first on people who are actually engaged with the emails, because those are what Gmail, Outlook, Yahoo, etc. That's what they can actually see. So we want to focus on that first. So if you're starting from zero, here's the very first thing to do. First, you want to build out your 30-day email engaged segment. So that's anyone who opened or clicked an email in the last 30 days. That's your kind of core default audience to start with for every single campaign. That's step one. Most brands skip this entirely, and they're either sending to their entire list, just one big segment, or the opposite end of the spectrum, they're building out 50 different segments. It gets crazy complex. Don't do that. Just get the base right first, and then we layer everything else on top. So the add-ons, the exclusions, the lifecycle stuff, we'll get to all of it, but none of that matters until your base is locked in. So quick break here. If you're running a D2C brand and you want a real second set of eyes on your account, link is in the video description. Happy to talk through, do a free 30-minute audit, no obligation or anything like that. Basically how it works is we'll start with an intro call to learn a little bit more about you, your brand, and where your goals are. After that, what we can do is take a look at your actual account. We'll do a full deep dive. My team will go in, give you the good, the bad, and the ugly, essentially. We'll show you the gaps, give you clear action steps. And then on call number 2, if it makes sense to work together, we'll build you out that audit and game plan. And we can talk about running all of this for you. And if not, you leave with a way better playbook than you came in with. Either way, back to the video. So the biggest thing that operators get wrong about segmentation is that they just build a few segments at the start and they never touch them again. They never update them. They're just kind of running with the segmentation that they set up 2 years ago. Instead, what you need to be doing is constantly looking at performance and adjusting segmentation over time. Your engagement segments, they're a great tool and you can use them like a dial. So when you start seeing open rates and click rates dip, you can actually tighten your time frame. So you can pull the window from, let's say you're at 90 days engaged, you can pull that down to 60. If that still doesn't do the trick, you can bring it down to 30. That's how you can use these as dials and you can systematically improve your metrics, and vice versa. Let's say you're sending to your 30-day engaged group and things are going well, you're getting great open rates and click rates, but you want to expand the reach. All you have to do is change it from 30-day engaged to 60, see how the metrics perform there, and then you can bump that time frame up and down. Bigger audience, you'll get slightly lower rates, but at the end of the day, you'll get more revenue by sending to a wider audience. That's how you can kind of dial things in, adjust your opens and click rates systematically by pulling and expanding that time frame up or down. Now, we're going to talk about the actual metrics that you should be hitting and where that actual sweet spot is when you're dialing in these engagement segments. So you don't actually need to A/B test which window or which time frame to use. All you need to do, let's say you're using Klaviyo, you can pull up a segment performance report. So you can build engagement segments at every single window. Common ones that we do are 14, 30, 60, 90, and a 180-day engaged. So you can look at the open rates and click rates for each one. You want to find the window where your rates are still strong, but your audience is big enough to matter. So you're kind of finding that balance. For most clients, for an average send, it's usually between 30 and 90-day engaged. Below 30 days, your audience is really, really small. It's really, really tight. And above 90 or 120, your open rates and click rates really tend to drop off. So what we're looking for is open rates, typically anywhere between 30 and 50%. Click rates, this one's a little bit more of a tough one. It's going to very much depend on your brand, your audience, where you're getting people from, how much paid media you've done in the past, what your offers are, things like that. We typically, at the end of the day, aim for above 1% in click rates. We've had certain clients where they can easily hit 3 to 5% click rates on every single campaign. And we've had others where it's an absolute struggle to get above 0.2 or 0.3%. Sometimes it's a deliverability issue. Sometimes it's the creative. Sometimes it's just the audience. It's very much a case by case basis. But at the end of the day, we're shooting for typically above 1% on those click rates. But what we really care about at the end of the day is your bottom line. So what's your placed order rate? What is your revenue per campaign? For campaigns, the average e-commerce conversion rate is about 0.08%. So let me repeat that, 0.08%. That means 8 purchases for every 1,000 emails that you send out. A couple industry averages, apparel might be a little bit lower at 0.07. Food and beverage, much higher, much easier to get conversions on something that's so replenishable and typically lower AOV. So food and beverage is like 0.17. Health and beauty, a little bit higher than the average, 0.11. Jewelry, a little bit lower than the average, 0.05. You can kind of see these averages and you can see that, people like, for example, in food and beverage are going to be buying a lot more often. It's a lot more easy to make a sale versus jewelry. People are not buying, jewelry, furniture, things like that. People are just not buying all the time. It's not as replenishable. So it's very much going to depend on your brand, your audience, where your price points are at. At the end of the day, we use these numbers as a floor. We're always trying to be above average. That's really the goal there. But at the end of the day, we want to see steady improvement over time, and we want to see a highly profitable revenue per campaign that's increasing month over month. Now, we talked about email engaged. However, that's not the only type of engagement that we like to look at. Opens and clicks are not the only signal. That's why we want to talk about site engaged. There's plenty of buyers who might ignore your emails, but still are visiting the website. And so if you only segment it by opens and clicks, you're going to miss these people. So we want to layer on site activity on top of email engagement. So that's where we introduce site engaged segments. Definition looks like this. It's basically the recipient can receive email marketing because they've subscribed. So we want to send primarily to explicit opt-ins, but we want to send to people who explicitly subscribed. It might be people who have subscribed to email marketing in the last X number of days, or they've been active on site, or they've viewed a product, or they've added to cart, or they've started to checkout. That's kind of the typical e-commerce funnel. They hit the homepage, they might hit a category, product page, add to cart, start the checkout. So we want to capture that whole entire customer journey. Same thing as before. You can adjust X up or down to make sure the recipients in that segment are actually hitting 30 to 50% open rates and solid click rates. So what you can do, again, you can run an engagement report on that segment to pull up the key metrics for that individual segment. The important point is now you have basically 2 different dials that you can turn to systematically improve your opens and click rates. So instead of lumping everything into one big segment, you have your email engaged segment and you have your site engaged segment. And if one of them is hurting, again, you can adjust those metrics up or down. You can see the open rate, the click rate, the average order value. You can see the age of the profiles. You can see how engaged they are. You can see how many people have received no emails, the open rate by age, and the number of engaged members by the age of the profile. There's a ton of things that you can do within that segment engagement report. I'm talking about Klaviyo here, but this is really, at the end of the day, how you stop guessing and start operating. Once your base is dialed in, it's time to go deeper. So level 3 is people who are interested in a certain product or a certain category. Here, we can actually match the creative to what people are actually browsing. So we create what we call product engaged segments. And same thing here, you can adjust X up or down depending on the number of days they've engaged specifically with a product or with a category. So how we define this is people who can receive email marketing because they've subscribed and they've subscribed to email marketing in the last X number of days. And then we're also layering in like they've viewed a certain product in the last X number of days, or they've added that product to their cart in the last X number of days, or they've started checkout with that product at their checkout. So we're basically just looking at people who are engaged with a certain product in the last X number of days. Level 4, going even deeper, is cross purchase patterns. So we like to look at what is the people, if they bought product X, what's the most common second purchase after that? What's their most common third purchase? Let's say you're running a skincare brand. People who bought serum but didn't buy the toner, people who bought the starter kit but never came back for the refill. This is where it gets really, really powerful. Most brands, they stop at their engagement segments, but really level 4 is where those 7, 8, 9-figure brands, this is really, really where you can extract even more revenue and make that customer experience that much better, because customers really feel like, hey, this brand knows me. They're actually giving me relevant marketing messages versus something that everyone could get. Talking about exclusions. So you have one side of the coin, which is who do you actually include within your campaigns, but also we want to think about who to exclude from your campaigns. There's really 3 core segments that we like to exclude from campaigns. So it's typically purchasers, people who have never engaged, and soft bounces. So purchasers, it's going to depend on your brand, but typically we don't want to send campaigns to people who just placed an order in the last X number of days. Could be the last 3 days, could be the last 7 days, could be the last 60 days. Just depends on your brand. People who just bought a food and beverage item are a lot more likely to repurchase versus if someone just bought a couch or a piece of furniture. Repeat purchase rates are going to be very different. So that's where it takes a little bit of critical thinking here. We also want to exclude anyone who's never engaged. So these are people who have received 10 or more emails. They never open, they never click, they never visit the website, they never add to cart, they never start a checkout, never place an order. These are completely dead weight, and we definitely don't want to be sending to these people. Good thing is, this is kind of like belt and suspenders. If you're sending only to engaged segments, that by default means that you're not sending to this never engaged segment. However, when you layer in some stuff like site activity and things like that, it's always good to just make sure you're not sending to this complete dead weight segment. Soft bounces as well. I'm talking about Klaviyo here, but typically we want to segment out people who soft bounced more than 3 times in the last 90 days. People hard bounce in Klaviyo, they're going to just get automatically removed, but soft bounces, a little bit different. You can kind of look at the differences between the two. Soft bounces aren't completely people that we want to get rid of. However, if they do it more than 3 times in the last 90 days, we want to get rid of those people from your campaigns. Now, talking about explicit versus implicit consent. This is really, really important. Not a lot of people are talking about this, and this is something that we bring up with every single brand that we onboard. So what happens is it's basically a gray area in your list. These are people who explicitly subscribed to email marketing by filling out your pop-up or checking the box at checkout. And then there's people who didn't explicitly subscribe, but you have them in your system. This is typically when, like, for example, on Shopify, if you go to the Shopify checkout, you add your email there, Klaviyo gets that. They get that email into your system, and now that person can start receiving abandoned cart or abandoned checkout emails. However, we don't necessarily want to send to those people within the campaigns. It's something that we take on a brand by brand basis. You can technically email them, but we don't always want to do this. It's a trade-off there. So by default, we don't like to send to these people only during your biggest promotions like Black Friday, Cyber Monday. It's really something that we talk about with every single brand. It's very much a trade-off. It's basically explicit versus implicit consent. If we're really ROI focused and we absolutely need to maximize every dollar with the brand, we can send to these people. But that being said, they're typically going to be lower conversion rates, higher bounce rates, things like that. It's just a conversation that we have with every single brand. No one size fits all here. All right. This is a move that really I do not see a lot about. However, it's a very common issue. A lot of times what happens is we'll do an audit. We break down open rates and click rates. We break those down by inbox provider. And this is a massive pattern. It happens all the time. Gmail is crushing it. We're getting 35, 40% opens on Gmail. Apple Mail is doing great. Yahoo, Verizon, all of those are doing fine. But then we see something like Hotmail and Outlook is getting like 11, 12, 14% open rates. They're dragging the entire account average down. For whatever reason, Apple Mail, Yahoo, Outlook, they're loving us, but one of the providers not so much. At the end of the day, here's the fix. We would build a Hotmail/Outlook 14-day engaged segment or a 30-day engaged segment. So for these two providers only, we're sending to people with a very tight window. Everyone else gets your normal cadence, but for people who are on Hotmail or Outlook, if that's the problem, ISP, we really want to tighten down that time frame. And at the end of the day, just if you can apply that segmentation just to those two inbox providers, you can massively increase your overall open rate, typically 5, 10, 15, 20%, depending on how bad the issue is there. All right, zero-party data. Zero-party data is basically information that people volunteer about themselves. It's typically going to be on your pop-up. So you might ask a question on your pop-up. What are you shopping for? What's your skin type? Are you wholesale? Are you retail? This is a phenomenal way to segment because it's data that people are actively giving to you. So in our segmentation, we like to create segments for each of these answers, one segment per answer choice. We always love to go with Alia. We use them with almost every single client, not because I'm not trying to sell you on Alia or anything like that, but we've tried every single pop-up provider on the market. And this is the absolute best way to do it in terms of conversion rates and just in terms of quality of the actual pop-up creative. Typical Klaviyo pop-up is going to convert at 2 to 4%. However, a well-built zero-party data pop-up on Alia, we're seeing anything from 6 to 8% all the way up to 12% in some cases. It's absolutely phenomenal. And for just multiplying that list growth, there's no better tool. At the end of the day, your pop-up does two jobs. It helps grow and massively scale the list, but also it's a great tool for segmentation. Most brands are just doing one or the other. Talking about a few lifecycle segments. As you grow your list and you start to use your engaged segments, the next step is to think about purchase behavior and differentiating your messaging by lifecycle stage. Before I jump in, I do want to caveat. If you're starting out, you're under 7 figures per year, I really would not worry about this too much. I would just focus on everything that I mentioned before this. As you expand beyond $1 million a year and you have, let's say, 50,000, 100,000, 200,000 people on your list, this is really where these lifecycle segments come into play. The reason I mention that is it takes a lot more work. There's a lot more resources and it takes a lot more dedication to your lifecycle program. So you really want to be thinking about those trade-offs there. So core of this is that a first-time browser and a 4-time buyer should not be receiving the same email. We are going to break this down into a couple key segments. Like first segment would just be your leads. These are people who never purchased. Really, the goal is to convert them with social proof, hero offer, education. We're also thinking about people who are new subscribers. We're thinking about people who joined the list in the last 14, 30, 60 days. This is really where you're going to be sending your welcome series, your follow-ups, your brand education, and your offer testing. We really want to focus on converting these leads into purchases. Ideally, once they make that first purchase, they love the product and they're going to be coming back for more. So that's where your one-time purchasers come in. Goal here is to cross-sell them onto that second order. That second order is massive in retention. We want to get them to 2 purchases, and that can really improve that overall LTV math. So that first and second purchase, absolutely critical to focus on. What we're also going to have is your repeat buyers. So these are people with 2 to 3 orders. Goal here, they've already bought twice. It's time to build a relationship. So it's time to really treat them not yet as like full VIPs, but we want to be thinking about new arrivals, cross-sells, exclusive content. Don't need as much promo here. It's really more about building that brand and getting them to refer other people to the brand. Finally, we have your VIP segments. These are going to be people who have already placed 3, 4, 5 orders, or they've spent already a ton of money with you guys. We want to be thinking about early access, exclusive drops. Don't need to do a ton of like public discounts. They don't necessarily need a deal to buy. They really just need to be taken care of and treated like VIPs. So again, if you're above 7 figures, you absolutely need to be thinking about these different groups of people differently. It doesn't mean that every single campaign is segmented completely by these 4 groups, but it's something to be thinking about as you build out your campaign calendar, especially if you have a subscription program. Your primary goal there is converting those leads into subscribers. And you really want to take it easy on sending to those people who already subscribed. It doesn't mean you ignore your subscribers, but in that case, it's more about new products, upsells, and how to get the best out of their subscription and how to maximize your LTV. That's really what the core focus is. Now, for your win-back segments, two things. Number one, you absolutely need to have a win-back flow automation in place. Typically, this is going to be a standard win-back ladder. So it might be day 90, flag them as at risk. Day 120, you have some sort of win-back offer. We miss you, soft offer there. Day 150, you could even introduce a stronger offer, some new arrivals. And then finally, let's say day 180, you're sunsetting them. It's kind of a, should we say goodbye messaging, last chance to re-engage, and then you can suppress these people. On the flip side, so you have your flows. Now the flip side is those campaigns. As people are in this group or about to be in this group, you really want to only be hitting them with your biggest offers, your product drops, your promotions, your hero moments, only your juiciest things to get them back. People who are lapsed, we don't want your regular Tuesday content email to be sending to them as much. We want to save your sends for the moments that really, really matter. Let's talk about cadence here. Once you have your segmentation in place, you need to think about for each segment, what's the actual proper cadence. So 30-day engaged, again, this is going to be very brand dependent, but they can typically do 3 to 5 sends per week. This is a very tight audience. They have the highest tolerance there. 60 to 90-day engaged. This is kind of your middle ground. I would shoot for 2 to 3 per week. This is kind of the default for most people. Dormant, 90 plus days. I would not send to these people more than a couple times per month. It's really your biggest hero moments, your product drops, your sales, your win backs, things like that. For SMS, we're doing the exact same thing. It's just a little bit more simple. We're really only sending to people who either recently joined the SMS list or people who clicked on SMS in the last X number of days. We adjust SMS engaged up or down based on ROI. SMS is very expensive. If it costs you $1,000 to send an SMS campaign and you bring back 10K, that's great. But if you're spending $1,000 and you only make back $1,200, it's not worth it. So we want to adjust your SMS engagement segments up or down to make this channel as profitable as possible. For SMS, we're typically sending to new subscribers plus anyone who clicked an SMS in the last X number of days. You can go a little bit wider for your hero moments, but at the end of the day, SMS is very expensive. So the name of the game is ROI. Very common question that I get, how many campaigns should I be sending every single month? What I would answer that is with a range here. Again, it's going to be pretty brand dependent. ROI is the number one thing that we're looking towards. Most common cadence would be 8, 12, 16, or 20 per month. The number that you want to start with this is your average revenue per campaign. So if you're on the low end, let's say you're making about $1,000 per campaign, I would not do any more than 8 core emails per month. If you're closer to 1,500 or 2K per campaign, makes sense to bump it up a little bit more. If you're already making $2,000 plus for every single campaign that you send out, I would bump that up even more. I would probably do 12 or 16. Let's say you're making $2,000 per campaign. If you send 16 out per month, that's going to net you 32K. But if you only send 12, you're only going to make 24K. Of course, as you send more, each campaign is going to bring in less. So again, that's why it's a dial that you can adjust up or down. If you're already making $5,000 or 10K per campaign, it makes a lot of sense to send anywhere from 16 to 20 campaigns per month. It doesn't mean that every single person is getting all 16 to 20 per month, but I'm just looking at the averages across the entire life cycle. If your team can keep up with the volume, 20 per month is a great place. It's really going to maximize your ROI. For most brands, the bottleneck isn't the audience. It's just getting those campaigns approved and out the door. It's really going to be a team bandwidth issue. If you're working with us, we can help you figure out exactly what makes sense based on your numbers, your cost of goods, your goals, things like that. A through line here, As you increase frequency, your average revenue per campaign is going to drop slightly. However, the overall revenue should go up. There's, of course, going to be a limit. Honestly, I mean, some brands like Dr. Squash, they literally send 5 to 7 emails per week. Most of the brands that we work with are not willing to do something like that, even though they could. Dr. Squash, they mail their list every single day and they're crushing it. That's their prerogative, though. That's their operation. I definitely understand that not every brand is willing to do that. It's a trade-off. All right, talking through a few sample campaign calendars. I'll show you actually, like if you were to do 8, 12, 16, or 20, like what would that actually look like in terms of the kind of the allocation. So 8 campaigns per month, this is really the minimum that we go with when we're working with brands. It's roughly 2 per week. Almost every single campaign is going to be going to your wide engaged audience. You're not doing a lot of niche tailoring. Winbacks and cross sells are just added in as occasional layers. We're not necessarily doing dedicated sends. Bumping it up here to 12 campaigns per month, that's an average of 3 per week. Now we have a little bit more room for more tailored content. Maybe throughout that month, we might have 9 broad sends, 1 more tailored win back, 1 niche cross sell, 1 kind of more niche zero party data segment. So you can see as we increase the number of campaigns, it allows us to get more tailored, send more one-offs, and just be, have an improved segmentation strategy. Now moving on to 16 campaigns per month. On average, that's roughly 4 per week. This is really where it starts to get fun. So in this case, we would probably do around 12 broad sends to the core engaged group. We might do 1 or 2 win-back specific campaigns, 1 or 2 cross-sell specific campaigns, 1 just to certain zero-party data segments, and 1 product specific to a behavioral group. Finally, about 20 campaigns per month. That's an average of 5 per week. This is really where you can start thinking about dedicated win-back sends, dedicated VIP sends, dedicated loyalty group sends, more brand building content alongside the promo cadence. You can go deeper with those promos, especially. Really, really gives us a lot to play around with. At the end of the day, the average subscriber typically is going to be receiving 2 to 4 emails per week, regardless of the total cadence. When you have more volume, again, it doesn't mean that you're blasting more to the exact same people. It means that you have more opportunities to send more niche, tailored campaigns to specific groups while keeping the average exposure consistent. And when someone's not engaging, they drop down to 1 or 2 emails max. Really, we want to be thinking about those engagement tracks. Another thing that we always like to layer in, you're going to have your 8, 12, 16, 20 core email campaigns. However, there's 2 other campaign types that are worth peppering into your calendar that we do for every single client. Number 1 is resends to non-openers. Second is people who clicked but didn't purchase. So we like to pepper these in for the resends to non-openers, especially for your sale emails and big hero moments. We want to resend the email to people who didn't open it the first time with a new, more clickbaity or punchy subject line and preview text, same content underneath. I will caveat this and say that we want to use these sparingly, maybe once a month, twice a month max for your big hero moments. Open rates and click rates are always going to be lower than the original. However, they are going to generate real incremental revenue and it costs you nothing in order to send out. So again, some brands are going to crush it with these resends to non-openers and they're super highly profitable. Others, it's not going to work. It really just depends on your audience and how big of a list and a lot of different factors. So it's something that we like to test, but we're not always doing. Secondarily, we have these people who clicked but didn't purchase. So we want to pull up the segment of people who clicked the original campaign but didn't buy, and we can immediately shoot them a follow-up. Could be a softer reminder, could be a stronger offer, could be more social proof. They're right on the finish line and we just need to push them a little bit more, get them across the edge. It's something that I don't see a lot of other email marketing agencies doing as much as they otherwise should be. And it's a great way, again, to just incrementally increase revenue. It doesn't have to be a huge creative lift for these, but these are some of the highest intent audiences, especially with that second segment that I talked about. These are people who are actively engaged with the campaign. They just stopped right before they placed the order. So it really, really helps when you're sending to those people who clicked but didn't purchase. With both of these segments, we pepper them in, maybe 2 or 3 of these total in a 16 campaign month. No more than like 10 or 15% of your total sends should be these one-offs. What we're very mindful of is, again, going back to at the end of the day, the ROI. These are not always going to crush it. Some brands, they really, really do, and it's a ton of incremental revenue. Some of the brands we work with, no resends or anything like that, it just doesn't work. So that's why you want to test it. But typically, like for the right brand and the right offer, it's an extra 10 to 15% revenue lift on top of what you're already doing with your campaigns. Talking about Black Friday and your biggest promotions of the year. This is an absolutely essential thing to talk about because, in e-commerce, your revenue is very much going to see big spikes and big dips, especially towards Q4. Like, a lot of the brands we work with, they're making like a significant portion of their entire year's revenue during Black Friday and during Q4. So it's absolutely important to double down, lock in, make sure your segmentation is dialed. During these weeks, whether it's Black Friday or big yearly promotions, the rules bend a little bit. So here's how we do it. I'll just use Black Friday as an example. Here's how we do it without just killing everything in January. So for the months leading up to Black Friday or your biggest event, you're doing everything in your power to maximize deliverability. In the 1 to 2 months beforehand, we're keeping offers light. We really want to hit hard when everyone has their wallets out during Q4. People are buying right before Christmas. Like, we really want to capitalize as much on that. So we don't want to burn the audience with a bunch of sales right before the biggest one. So during Black Friday's Cyber Monday week, we open the gates. Deliverability, ideally at this point, is at an all-time high. We're crushing it up until this point. You can send to way wider audiences. Even with your biggest hero moments, you can pull out segments like you can actually send to the entire list. This is actually when it makes sense to send to a majority, if not all, of your entire list. We almost never use this. We are very sparingly. However, for Black Friday, Cyber Monday, it's a couple days of the year where you can really crank it and go very wide. At the end of the day, it's going to make you a lot more money. 2 weeks after, we're cooling down fast. We're getting back into the normal cadence, and we're keeping deliverability as high as possible and doing a little bit of kind of picking up the pieces afterwards. So cleaning the list. This can be a very difficult move in retention. Like, you have these subscribers in your accounts and now it's time to suppress them. It can be very difficult and you want to do it right. You don't want to throw away revenue, but it can feel like that. So you're not throwing away revenue. You're protecting the rest of your list and you're lowering your ESP bill. I'll talk about Klaviyo here. That's what most of our clients use, but Klaviyo charges per active profile, whether they're engaged or not. So if you've got 50,000 deadweight subscribers sitting on your list, you're paying for 50,000 people who are just never going to buy. We do this monthly for every single client that we bring on. So we build 3 suppression segments. We build each and we run a final win back through them. And then we suppress whoever didn't engage. I'm just going to briefly run through these 3 segments. We're going to have people who never engaged, people who were unengaged in the last 365 days, and then people who never clicked or purchased in the last 365 days. So it's different levels of kind of how aggressive you're being. Process is the same for all 3. Build the segment. Number 2, you run final win back campaign with your strongest offer. 3, anyone who doesn't engage with that gets suppressed before the next billing date. And we're repeating that monthly. That's it. That's the list cleaning rhythm. Every brand, every single month. Couple common mistakes that I see brand owners making, not from theory. These are from the multiple audits that we do every single week. These are some of the most common things that we see in the accounts. So number 1 is just having one cadence across all audiences, no segmentation whatsoever, or very minimal segmentation, pretty much doing step 1 of everything that we talked about here, but nothing else. Number 2, suppressing without trying to re-engage these people first. You're going to see at least some portion of these people actually re-engaging if you're doing it correctly. So we don't want to just suppress people without trying to win them back. Number 3, ignoring inbox provider performance. As I talked about, you might be crushing it on Gmail and Yahoo, but Apple Mail is tanking. We want to be looking at performance by inbox provider. Number 4, building flows once and never optimizing. Flows, a huge thing that we need to be constantly improving and building and looking at over time. So at least on a quarterly basis, we need to be looking at those flows, making sure the conditional splits are running, make sure people aren't getting emailed too often, make sure the content is up to date, things like that. Very, very important to be thinking about those flows as well as the campaigns. Flows are typically 30 to 40% of your email revenue, so they're a huge revenue driver. And ideally, you're setting them up once and making some minor tweaks, but really don't have to touch them too much. Number 5 is just sending to way too wide of an audience because you're afraid of a smaller sending number. At the end of the day, all of the steps in this guide should really help you, your click and open rates, but also the amount of revenue that your campaigns are bringing in every single month. Wrapping up here, talking about a couple things that we look at. I think open rates are honestly a bit of a vanity metric, but that being said, we still want to be in that 30 to 50% range. Click rates, we're typically shooting above 1%. Placed order rates, average in e-commerce is 0.08%. So 8 sales for every 1,000 people that you email. We want to be above average, of course, but what we're looking for is steady improvement over time and revenue per campaign that's highly profitable and steadily growing. In terms of negative engagement metrics, we have a couple. Unsubscribe rate, we want to keep that under 0.3%, spam complaint rate under 0.1%, and bounce rate under 1%. This is something that we want to be tracking weekly. If most are green and one is in the red, you have one fixable problem. All it takes is just a little bit more of a deeper dive. That's something that we're doing all the time, and spot checking. Now, going even a step deeper, this is for some of our bigger clients. We're thinking about, how can we take it to the next step? So quick disclaimer here, most of our clients use Klaviyo. That's what I've been showing throughout this video. However, these same principles work across MailChimp, OmniSend, SendLane, HubSpot, Salesforce. The button names change, but the logic really doesn't. This is really where it gets interesting. We were working actually with a publicly traded billion-dollar brand with AI-powered segmentation through k-means clustering. So instead of just building segments using our brain, we let the k-means clustering model do the work for us. So we fed it the entire customer database, and it finds the natural groupings. It basically takes your data and splits it up into your 5 core groups, 5 clusters in this case. So it's looking at all the different data points. They had a ton on every single person that's in their account. In this case, it was multiple millions of different people within each of these segments. So it was a big effort. But what we broke it down to was high net worth individuals who have distinct buying patterns, high AOV, dual income couples, young professionals, gift buyers, things like that. So each cluster gets tailored messaging, creative, and offer. For most brands, you don't need to go this crazy detailed, but it's just giving you a preview of what some of those top level brands are doing and what's most likely coming in the future to everyone. I really think the future segmentation is, again, with AI is here. So I'm definitely thinking that's going to be something that everyone's going to be able to do, no matter if you have 1,000 people on your list or 1 million people. This is really where, again, I see the future of segmentation. All right. If you want this entire playbook built for your brand, go ahead, book a time to speak with me. Link is in the video description. It's 30 minutes, no obligation or anything like that. We've worked with over 50 different D2C brands over the past 6 years, anywhere from just starting out to multi-billion-dollar brands. 10x average return on investment in the last 90 days. Typically, brands that work with us see an average of 10 to 35% increase to their revenue. Most of our clients are staying above 1.5 years. What we do is we'll talk on that first intro call, and then between the first and second call, we'll get access to your account. We'll show you the gaps. We'll give you the action steps. And if it makes sense, we'll talk about what it would look like to partner with ZHS. Either way, you know exactly what's wrong and how to fix it. Again, totally no obligations. Great opportunity right there. All right. So that was the entire playbook. 6 moves. Number 1, stop sending too wide. Number 2, build your engaged base. Number 3, layer on add-ons through interest, behavior, lifecycle segments. Number 4, apply your exclusion segments. Number 5, you want to tier your cadence by audience and total volume, really looking at revenue per campaign. Number 6, you want to suppress dead weight monthly. That's it. That's the entire video. Now, go ahead, start building your base. If even one move from this guide changes how your next campaign goes out, hopefully it was worth it. Drop any questions that you have in the comments. And of course, if you want us to build out everything, all of your email marketing, help you guys crush it with segmentation, copy, design, strategy, whole 9 yards, we do it all. The link to talk with me is down below. Appreciate your time.